Dividend stock investors are curious about John Deere and Company, and the company's already up over 13% year to date in 2025, excluding dividends. So investors want to know what's going on with Deere stock. Is it a buy or sell at current valuations? And so I'll answer those questions in this video. I'll share with you the details of the latest developments, how the company is dealing with tariffs and the impacts to demand. I'll share with you my proprietary discounted cash flow valuation model, which I just updated today, and answer the question if I think this stock is a buy, hold, or a sell. Of course, coming into this video, I had the stock rated as a buy, and so I'll share with you if I'm changing that recommendation or keeping it rated as a buy after the latest developments.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Deere's management team in the most recently completed quarter said that despite challenging market dynamics, including increasing trade barriers and increasing tariffs, their equipment operations segment delivered a 12.6% operating profit margin. The company went on to say that overall sales for the company were down 9% to $12.018 billion. For the equipment operations business, that was also down 9% to $10.35 billion. Net income at $1.289 billion came in at $4.75 per share. So looking at segments for the company specifically, the production and precision agricultural segment, revenues were down 16% in that segment. The management team said this was due to lower shipment volumes and unfavorable price realization. And this means lower average selling prices. The company had to offer lower prices to generate more sales because demand for the products was not very exciting. Operating profit in the quarter was $580 million from the segment with a 13.6% margin. The year-over-year decrease was primarily due to lower shipment volumes and, of course, the unfavorable sales mix. So the management team discussed 2025 outlooks and said that demand continues to be pressured by high interest rates, elevated used inventories, and trade uncertainty, which is partially mitigated by tight global stocks for grains and oilseeds. The biggest factor, in my opinion, is the trade uncertainty. You notice there the management team said uncertainty and not the increase in tariffs. And that's what I've been discussing as well with all of the companies I'm following. It's not that companies have to pay 15% or 25% higher cost because of tariffs, but the bigger question is the uncertainty. If businesses knew for sure that their cost and everyone else's cost are going up by 15%, they can manage that more effectively. But if they see the price going up by 15% one week and then 25% the week after that, 50% and then back down to 15%, and then certain companies getting exclusions because of their relationship with the president or with certain people in the administration. And so businesses don't have the information they need to make these decisions because it's all over the place, the policy. That's what makes it more challenging. That's a bigger challenge. Of course, facing a 15% or 25% increase in your cost of imports is a big deal, to be sure. But it's an even bigger deal when you have those question marks surrounding those increase in tariffs. That's what makes it more difficult to manage. It would be a lot easier to manage if they knew it's just going to be 15% more. Everybody's going to face that same 15% cost, and we can make decisions based on that. But if one day it's 15% and then it's 40%, and you don't know if your competitors are going to have that same cost increase, or if it's just going to be you, and then it's going to change, and then the next administration might change that as well. So you can't really make any long-range planning. All of that uncertainty is causing a pause in business activity, and that's hurting demand for Deere, and that's one of the main reasons demand is down. All right, so now that we got an idea of the latest developments at the company and how tariffs are impacting demand, I wanted to share with you my proprietary valuation model, which I updated today, and I see Deere being worth $575 per share compared to the current market price of $481. the stock looks undervalued. And I incorporated for a big slowdown here in 2025. I have the company generating free cash flow of 3.68 billion, down from 7.6 billion in 2024. But I'm also forecasting starting 2026, the company's demand for products and sales and free cash flow recovers, not completely, right? Not to the 2024 levels, but starts to recovering in 2026 and improving from that point onward. So when I also look at when I look at valuation at fiscal.ai, which is my preferred data source, and I look at the forward price to operating free cash flow, it's trading at a price to OCF of 17, which is near the lowest you've been able to buy this stock going all the way back to January of 2025. So I've had this stock rated as a buy all year. For several years now, I've had Deere stock rated as a buy. I've liked the valuation in relation to the risk, and I last updated this on May 2nd. So today I'll go ahead and update this recommendation again, reiterating my rating as a buy for Deere stock.
Hey everyone, I'm excited to announce that my book, Make Money Buying and Selling Stocks, a 6-step framework for evaluating publicly traded companies, is finally available for sale. Unlock the power of intelligent investing with my 6-step investing framework. It's a proven system designed by a university professor and a chartered financial analyst. Frustrated by the lack of frameworks that met my needs and high standards, I developed this comprehensive guide to help investors at all levels make confident and informed decisions. In this book, you learn how to assess opportunities, manage risk, and build a portfolio that works for you. No investor should dive into the market without a solid strategy, and this step-by-step framework provides you the roadmap you need. Whether you're just starting out or looking to refine your approach, this guide will empower you to take control of your financial future. I've added the link in the description below.